Personally, I am surprised that we haven't seen any kind of a major correction in quite some time. Even in a normal bullish scenario, it's not unusual for there to be a correction of 23, 38, even 50%. As long as silver stays above 71, you're solid. The same with gold. As long as it remains above 4,300, I believe we could see $5,000 by the end of the year or sooner. And that's not that much of a stretch. In fact, if gold and silver perform 50% of the gains they did last year, that is actually a walk in the park. That would be achievable and not turn anybody's eyes going, wow, we did not expect this.
Precious metals are smashing records. Gold recently hit an all-time high of $4,547, while silver rocketed from $30 to $84. Despite minor dips, the bull run is showing zero signs of a true correction, leaving experts stunned by this relentless momentum. If you've been waiting for a massive price drop to get in, your window of opportunity might be closing faster than expected as gold eyes the $5,000 milestone. In this clip, market analyst Gary Wagner expresses surprise at the lack of major corrections in gold and silver, despite their massive 2025 gains. He remains bullish, noting that as long as silver holds above $71 and gold above $4,300, we could easily hit $5,000 gold soon. Half last year's performance would do it. But will a real pullback finally hit? Watch to find out. Don't forget to like, subscribe, and enable notifications for additional in-depth content. Thanks for joining us again. Enjoy the video.
Personally, I am surprised that we haven't seen any kind of a major correction in quite some time. The fact that when we look at gold, for example, on the 26th of December, it hit its all-time record high close. This is basis the most active February futures contract, 45.47. And the fact that it came down to a low of about 43.13, that, traders, is not by any definition a correction. It's a slight pullback. We can call it a number of things, but one thing that would be inappropriate, in my opinion, is to call this little tiny dip in gold a correction. Simply put, a correction is typically a sell-off of a 23% or greater. It can be as deep as 61.8% in a bull market, recover, and market technicians look at that as a deep but respectable correction. They don't look at it as a pivot from bullish to bearish. We have seen no technical evidence that that is occurring. And until we do, I think both precious metals, gold and silver, are running on all 8 out of 8 cylinders, although most are 12 and I drive an electric, but nonetheless, it's driving at full steam. If you see the move, and I'm trying to put it so that we're looking at all of last year, which won't be that difficult, we've seen this market really move considerably. Figuring that it was trading at the lows at about $30, traded to a high of over $80. This is basis the most active March contract. There has been really no correction. The move itself from the former high on the 26th of December, $76, it comes down to $70. While $6 in silver is a reasonable and sizable move, it certainly, again, doesn't qualify as a correction, because when we look at the totality of the move from 30 to 80, $6 back is not any kind of a viable percentage in what we look for in terms of a real correction. Simply put, we have not seen either gold or silver have a realistic correction pretty much all of last year, and this year's too early to tell. But again, when we are pairing these precious metals against fiat currencies, in this case against the US dollar. The recent moves I know that came in gold took gold to all-time record highs across the board in almost every currency, not just the euro, not just the dollar, but pretty much all of the currencies. And that is a strength statement, meaning regardless of what currency you pair it against, you're pairing paper against an asset that has for thousands of years had real intrinsic value. Mm-hmm. People more and more are not looking at currencies as having intrinsic value. And that to me is the key. But as long as silver stays above, call it $71 if I want to kind of tune in, we are not looking at any change in terms of whether or not silver is in a bullish or bearish trend. Mm-hmm. What we can say is we've lacked any kind of healthy correction. And so I always believe the caveat has got to be buyers beware, because at any moment we could see a real correction take place if major players begin to liquidate long positions. I am still accumulating. I am still advising in terms of our trade. 95% of them initiate a long position rather than going short.
Beyond the price charts, Gary Wagner highlights a growing global unease driving this supersonic momentum. From aggressive gold accumulation by central banks in China and Poland to the ripple effects of U.S. actions against Venezuela, smart money is ditching dollars for hard assets. While the fear of missing out, FOMO, grips retail speculators, Gary explains why central banks are prioritizing gold as the ultimate storehouse of wealth. Are we witnessing a permanent shift away from fiat currency? Stick around to see why this rally might just be getting started.
I see gold and silver, because they're both acting very similar in a similar manner, trading near the recent all-time records, selling off slightly, traders entering the market, buying that dip and moving it back up.
Yeah.
Again, in a normal scenario, even in a normal bullish scenario, it's not unusual for there to be a correction of 23, 38, even 50%, and still look at it as bullish. In other words, we don't believe that when we see these minute sell-offs, that a real pivot has taken place in which market sentiment has moved from bullish to bearish. Yeah. And we've got so many fundamental factors going on in the world right now. Recent action by the United States against Venezuela, that one kind of, at least to me, came out of the blue. I'm not privy to inside information, but that is the kind of behavior that puts countries on edge, because they don't know what a next move might be and who that might be against. Definitely. And people are on edge because of it. I see 45.50 is a very achievable level. We're at 44.60. And in terms of the numbers that I'm looking at throughout the year, I would not be surprised if we saw 47 and 48 by the second quarter of this year, if not sooner. I'm trying to stay away. I'm good at calling prices, not very good at calling time parameters to get there, because the pace at which we have seen these metals move, especially with the lack of any realistic correction, has just kept this bullish momentum going. And there's that FOMO from regular speculators that watch the market really go supersonic and not take advantage of it, which is why I tell my clients, you might want to slow your level of physical accumulation if you're a buyer, but you don't want to stop, because even though it could come down, we're sitting above 4,500. I believe we could see $5,000 by the end of the year or sooner. And that's not that much of a stretch. In fact, if gold and silver perform 50% of the gains they did last year, that is actually a walk in the park, that would be achievable and not turn anybody's eyes going, wow, we did not expect this. As long as silver stays above 71, you're solid.
Yeah.
That's the area that you want to look at. That is the series of bottoms that came in through December. The same with gold, as long as it remains above 4,300. If that maintains the price levels we see during the first quarter, expect the upside rallies to have a lot more energy than any kind of downside correction until it does come. In other words, we're bullish until we're not, till we're proven wrong. But price action has not proven a case that says we've seen any kind of a pivot from bullish to bearish. There are a few countries, Poland specifically, buying a lot, China aggressively buying a lot of gold. There's a reason that central banks continue to be aggressive accumulators of the metals, specifically gold. Silver's a little bit more cumbersome to store. But there's a reason that smart money is putting their assets that need to be liquid, so to speak, or central banks that need to have a big storehouse of wealth. They're putting more and more in gold and less in physical accumulation of dollars.
Wrapping up, Gary Wagner emphasizes that we remain firmly in a bullish until proven wrong environment. While he admits he can predict price targets like $4,800 by the second quarter more accurately than the exact timing, the sheer energy of the current upside rallies is undeniable. This isn't just about speculation. It's a fundamental move toward assets with intrinsic value as faith in paper currency wavers. Whether you are a long-term accumulator or a day trader, the message is clear. The path of least resistance for gold and silver is still up. If you found this breakdown helpful and want to stay ahead of these historic market moves, make sure to like, subscribe, and turn on notifications so you never miss an update. Your support helps the channel grow and keeps you informed when the markets shift next.